Just like insurance, certificates of insurance only matter once something bad happens. In most cases, when you hire a subcontractor, you expect them to use their skill to deliver a product or service. You also want to establish a plan for their failure. If a contractor causes an accident while they're working for you and they destroy your property, or even a component that they install has an undetectable design flaw that causes a building to flood 5 years later, you want to make sure that as part of their service, you're also receiving protection from their mistakes. The best way to be sure the contractor can pay for their own mistakes is by checking that they have sufficient insurance. The way you check that they have insurance is with a three-pronged approach: request certificates and endorsements, verify coverage, and monitor the insurance over time. Your contract with the subcontractor should tie all of this together, establishing that they must provide proof of insurance, what kind of insurance they must have, and that they need to cooperate with your efforts to verify and monitor their insurance. You might think, wait, I already have insurance. Won't that cover any mistakes my contractors make? And that's a fair point, but it can also put your business in a dangerous situation. Anytime one of your subcontractors causes a claim, your premium will increase in price. Your yearly limits will also be diminished by each accident. If those limits are exhausted, it's as if you had no insurance. In this case, it's smart to buy more insurance, but not everybody does, because with multiple large claims, insurance can become extremely expensive and even unobtainable. You might also say, but the contract already requires that they have insurance, so they have to pay for their negligence anyway. And this isn't necessarily true either. If the business can't afford to pay for the damage, they may end up just declaring bankruptcy. In other cases, if there's any ambiguity about who pays in the event of a claim, you will likely have to resolve the claim with a lawsuit. In the best case scenario, the contractor has the insurance you require and pays without complaint, but you can't rely on it working out that way. Even if your subcontractor has insurance, wants their insurance to pay for the damage, and they believe it was their fault, if you don't check for certain endorsements, the insurance company may sue your business or your insurance company, claiming you negligently caused an unsafe environment and are therefore responsible for the accident. Certificate tracking, and more generally insurance compliance tracking, sets up a plan for how both you and your subcontractors are going to conduct yourselves in the event of an accident. The goal is to remove any ambiguity about who will be held responsible for an accident. This way, nobody gets sued, the responsible party pays their deductible, and insurance covers the damage so everybody can get back to work. Now that we've established why you might want to track certificates, our next video will cover the basics of how to track certificates.